what are the advantages of active and what are the advantages of passive. Active, one is assuming that it is possible to earn superior returns. Passive, there is no possible gain, so whatever the market is moving in whatever direction you go. Active, obviously moving in and out of securities, which means transaction costs, right? Maybe capital gains. There are also something in terms of taxation, right? So obviously when you have transactions tax, so the returns that you effectively earn, right? Suppose, let's say even if I am able to earn, let's say, a little bit more than a passive strategy, but I also have to look at the point that an active strategy will have to look at the fact that I will have some transaction costs. So the net return that I may get in an active strategy may not be so much, right? And over the period of time, it has been actually proved that portfolio managers cannot consistently beat the market. Over some periods of time, a particular fund manager may beat the market, but number one, portfolio managers cannot beat the market consistently. Even if a particular portfolio manager manages to beat the market, there is no guarantee that in future this particular portfolio manager will be in future be able to beat the market. Secondly, the question is that is there a situation where you possibly can identify a security which will give you, in a passive strategy, of course, you just pick up securities as is. But in an active strategy, is it possible for you to identify a security which will give you a higher return for the same amount of risk, or for a lower amount of risk, the same amount of return, or higher return and low risk? There are three combinations that you have, right? So is it possible that we are able to identify particular securities, but for the same amount of risk, higher return, for the same amount of return, lower risk, or higher return and lower amount of risk? Is it possible that can you have a situation where you can have these three scenarios, and therefore if you have these scenarios and it is possible to do that, then yes, an active strategy works. But if it is not possible to do that, it doesn't work, right? The research has pointed out that it is very difficult to do that, right? It is next to impossible because return and risk is highly correlated. Any particular asset class that you see, if the particular asset class is giving more return, then there is bound to be more risk. If it is giving less risk, then the returns will be proportionately lower. So if you have this kind of a scenario where there is massive correlation or very high correlation, then an active strategy does not work. Secondly, in the past, might we have some possibilities that okay, right, there are some gains and all, but can you say that the markets are predictable? Can you say that if I adopt whatever, in terms of trying to figure out that okay, this particular security, this particular sector, can I with certainty say that the market is going to be predictable and that this particular sector has to do well?
Indian markets are predictable.
For that matter, no markets are predictable. So even if I do all the kind of research that I may do in terms of trying to figure out EIC analysis, right, at the end of the day, I may have done the best kind of research, but eventually what happens in the market, small things in the market and whatever calculations that I may have done will not work. Okay? Obviously, secondly, that active management is obviously more risky than passive. Okay? So in terms of that, it is a doubtful whether an active strategy actually is a better strategy than passive, right? And most important is that by using an active strategy, right, sometimes, if you are actually looking in terms of achieving your investment objectives, active strategy may not work, right? Because you will continue to rebalance, right? Every time something happens, every time you go in the market, so again you will rebalance. Again something happens in the market, again you will do something. So if you are trying to follow a consistent kind of a policy in terms of trying to meet your investment objectives, the asset allocation in terms of an active strategy may be a little cumbersome to achieve and monitor, right? So that's basically about active and passive strategies. Okay.